Welcome to TradeTheMBI.com. This is John. This report is for the 20th of March. Well, once again, we came back to that 2319 level, and we fought desperately to support above it and have been maintaining it. So, bravo. That's a lot of money it takes to hold on to greatly depressed era levels, but you can see that we were starting to build in a little bit of midterm, short-term buyers. We developed this blue candle here, but we still didn't have the orange reset. We're getting close to it. So that's why we're seeing the push again. That 2505 is the buy above level because, of course, that will be the turnaround point. We've seen steady rise in the shakeout, so we've had an improvement from that standpoint. From a general breakdown standpoint, we're still pretty darn weak. And of course, the 2505 is so close to the 2527 daily, which would put us over the top from a 23% Fibonacci line. We're still maintaining 100% line even until that starts to decline. It's going to be hard pressed for any rally to start to produce anything dramatic unless you're getting just massive amounts of Fed money pouring in. But you know, while they talk about some of these stimulus things and that, it's all wonderful to send people money in that, but if you can't go outdoors, do anything with it, it makes it kind of impossible. You see further evidence. Now California has gone into full lockdown. What you'll probably start to see will be more of a martial law imposition because many Americans just believe this is just a standard flu. And no real impact, though you saw a 50% jump in cases overnight. That still isn't reflective of it. I've tried to go over the math with people. If you take the number of deaths that have experienced and you multiply by a factor of 250, you get a better indication of where we are. If we're assuming a death rate of 2 to 3%, you can take the number of deaths and multiply by that number. And that sort of tells you there's a couple of million cases out there right now already in the world. You just don't know it yet, but you'll find out in 14 to 28 days. And this is the case. And what you'll see is the U.S., which went from like 12 or 13th place, is now number 5 or 7 in the world. And that's only going to accelerate because there's been very lax containment within the U.S. as far as travel and everything else. Fine, you've slowed it in some areas, and you're going to have pockets of exposure, but that will start to expand rapidly as time goes by, particularly since we know that a lot of people just carry this quietly. But even here in Florence, just overnight, there were 20 people died just overnight. And that's the kind of rapid increase that you get, and it's very delayed. So there's still another, even with the full quarantine that we've been in for 13 days or so, there's still another couple of weeks before that's going to translate into a reduction in cases because people had already been infected. So just bear that in mind when it comes to the idea that there's going to be some kind of recovery. Now, of course, U.S. is buying up anywhere from 30 to 70 million barrels of oil. That's going to help at least stabilize oil prices and that. But will they be able to continue to drill and do the things as more plants close and that? You're going to see on this special day, which is a options expiry, multiple triple witching. I'm not sure if it was quad or triple, but that's going to create a lot of volatility intraday trading wise. So we look forward to that. So you'll get some burst. Now, NASDAQ, you can see performing a little bit better already over the 23%, and it already had that dip and the cross. So this is where the NASDAQ, again, leading. It led from the rally standpoint and also the early decay element, but right above that 23% already. So there you have it. And something we expected. The euro continued to collapse. Now we filled the positive extremes and we filled the dip below the red line, which is right here. You get the follow through breakout. They're going to try to bring that back up, but now you're between those two blue lines that I had, which is worrisome for the EU. The ECB is bankrupt. These are global implications from a dollar shortage around the world and whether or not the Fed can do what it did in 08, which was basically give Europe $11 trillion in liquidity to keep their banks open. But, effectively all European banks are bankrupt. with the asset devaluations, and you can see it from companies like Boeing in America. You get 250 billion in debt. They've been buying back shares for years, and now they're asking for $50 billion. Now, will the U.S. make the same mistake that it did in '08 by just handing money to companies without, restrictions like it did to the banks and just made them, super wealthy individuals? We'll see. I think it would be a mistake at that point to do it. Now, oil, you can see the tiny little pop. Hasn't still created a full buy yet, but close there. But again, there's going to be a no steel reset, meaning it didn't dip below the red and come back. So any move it makes right here is still going to be a bit suspect. Now, fine, it's moving up because you're above the plus 13.5, but once it dips back below, that will fade a little bit more. So the U.S. intervention, I thought this was kind of fun. It sort of turned off all the paint bars, and you can literally just go through and mark the areas. Now, in this case, you had a DOC spread, and it's something we talked about intraday, but with a full steel reset. Now, in this particular case, when the DOC spread came over here at the ABM, the steel wall reset was not below the negative 13 point, and that's where, instead of it being up above, it's expressing just a little bit more weakness, and that's what created the down draw, because you already had the red under green and falling red DOC below zero. If it's above zero, you still have plenty of potential power there, and it kind of held that for a long time on gold. But what happens in a mass liquidity event is people have to sell gold, and then we flipped from the liquidity event of them getting out of gold to pay for equity positions. You then ended up with a massive deflationary potential, and that's what's really hitting gold this particular time. Well, intraday, we can look at right now, which is overnight. There was continued buy pressure. They love to do this because you've got no real resistance overnight and even before the European session. So in the Asian session, they just drove that. And then as we started the European session, of course, people sold into that bounce right there, the nice DOC spread that started right here. This dark cyan color that turned to the magenta, and then it began to drop off pretty quickly from there. And all you're doing is filling. We got a bunch more positive extremes even from the intraday. Let's see, going all the way back to our 2405, which coincidentally is been a number we've had for a while, and then the other one that takes us just below that 2380 level. So no reason to really manipulate or move too much of that, because we capture a bunch of them right in between there. So all in all, that's pretty decent. From an intraday standpoint, we had a lot of good stuff happen. During the day, we had a lot of dips below the red line, and we talked about these live as they were taking place, where you get rising gold setups that suggested that even though you might have no steel reset and gold when you're at the 50% and that's rising, you got to wait for that to begin to reach its peak, and then you could look for those DOC spreads to really have a bit more impact. In this particular case, you shot it past the previous mark. That was a good one, and we came down and literally filled that dip below the red line pretty darn quick, and that's what those little equal signs are until it comes to it. Boom. And that made then another leg lower overnight, which was fine. And then we talked about this. These were, something I've mentioned before. Color to color on the paint bars. You get the signal. It was green. Now you can certainly look at some of the blue and some of the other colors, because they come in at varying options of whether it's a P2 with the X or P3, and whether or not they meet certain conditions as far as the steel combinations with cyan shakeout, rising gold in the proximity in the Morganacci lines, whether the highs of the Morganacci have maintained themselves or whether they're dipping. So it takes a lot of those into there. But we were just pointing out, it's like, look at from color to color. This was plus 46, then it turned to the short. Even if you waited till right at the yellow to cover, doesn't mean you had to go long at that particular point, but certainly if you just wanted to flip back and forth. And then from there, we started coming across right here, it was even. I mean, this one, if you stayed with that, probably would move to right about that gold one. And this was an interesting kind of faux rally that we saw taking place because you saw the steel rising, crossed over. The shakeout had turned positive. That was the flip around at that particular point, and then cyan went under red, and then it immediately produced a DOC spread, but it was a pretty decent shakeout at that point. But you had positive extremes. It filled those, and then created another wave. But you knew that that wave was probably not going to last forever. But it was one of those where you had to wait for it. And at this particular point, we got to the, above zero for the red DOC. And once it breaks back below zero, that's when I usually like to attack those, particularly if you get a nice orange that is, really good separation. Even if you waited to where the magenta kilo was, which was the separation that was taking place right here, it still did what it was supposed to do. And that was the whole point of the Paint 2 with the GAM function, to follow these kinds of trades so that you could get an idea of how, even within a short-term chart, what it does is it ignores, in some cases, if it's still following within the general trend, it will ignore certain aspects of the DOC simply because it's following along with the expectation of continuation, because a trend is your friend until it ends. That's been a saying from way back in the day, but worth noting because you can certainly collect an awful lot of points when following these signal to signal. In fact, if we even just want to take this one from the high mark, you would take it all the way until the first short signal. If we can get that to click right there. Pretty nice move. So that's the long and the short of it. I'll continue to post on there. I'm going to be putting together a bunch of the different functions that I've created that will allow you to program some of these specific elements for any of those of you that like to do it. I've created the P2s that will return a value of 1. I'm also working on the X's and those values, and then going to incorporate them into the ABM that I've been working on that will be more consistent with when it dips, following along a little bit until there's an actual significant enough move before it begins to rise, so that you don't get the violet upticks, but it'll also be more consistent with the colors that pop in, and that way you'll be able to see resets. Because again, trading above and below the ABM gold can be a very effective approach, because in a particular case where you break below, you're obviously going to have to, depending on what Morganacci line, you would set at least 2 levels above it. So in this case, a 76% stop. So even if you chose like this DOC spread right here, and you set your stop at the 76%, you don't really have to do anything, even if it bounces back and forth until it takes you out at that level. And then it becomes just a matter of following it as it decays, and it's exactly the approach that I usually take. So hopefully you'll take that into consideration as you're either utilizing for day trade or for even the broader time frame. But like I wanted to point out on some of the 50Ks, I don't have a paint bar color on this, but some of these bars that come down that would create the cells, I mean, if we're up 80, 100 points, there's no way you were going to allow this to decay all the way down to a break-even setup. It just isn't going to be something you're going to do. Or even this trade right here where you had, these are significant moves. It doesn't look like much on the chart, but it is. 2407, and then you shot up all the way to 57. I mean, it's pretty sizable not to have increased the stop to either break-even or better than break-even. So I'm just pointing that out because it's a little more effective than the strategy doesn't necessarily take into account point gains, though that's something I probably will want to incorporate into it just for a prudency standpoint, collecting gains and making sure that the profit factor stays up there. But The 50K Opus T programs were always designed to be more of following broader trends. They're just not as responsive when it comes to breakdowns. And this is why I've always suggested to manually enter them and then just become your stop by just adjusting per the numbers that pop up on the screen. And you'll always do 100% improvement profit-wise compared to what the program even does. That being said, trade well, and I will send out those details function-wise as soon as they're ready. Have a good one.